you would select option 1 on paragraph 13, and then you put it in the MLS when they're ready. You don't have to stipulate a date in here. Basically, this just says you have to follow the rules of your MLS. So if you would date your listing agreement today, and then on June 1, when you input your when you go live, you would just put MLS input date would be June 1. Okay, so you don't have to go back and change the listing agreement or do anything like that. So just wanted to clarify, because a lot of people are asking questions about that. If you do have a listing that's not going on right away, you just would fill it out normally. They would check option 1 here that says it is going to go into the MLS. However, the MLS locally has removed the 48-hour rule, saying you have to have it in within 48 hours of signing this. You just have to have it in within 1 business day of starting to market it. That's the only rules. So, you're fine to have a listing agreement but not go on the market for a couple weeks. But the moment you go public with that outside of our office, then that's when the 1-day rule kicks in. So just an update. Also want to clarify, this is not a local rule. This was passed by NAR. So there's a lot of flack being given to our local board and MLS. They didn't come up with this rule. They're adjusting to it. Now, I don't love that they don't have a coming soon option in the MLS. So we're lobbying pretty hard for that, to have that option on there, because then that would allow you to do some upfront marketing before you put your house on the market for showings. So that's it from the broker standpoint.
Awesome. Let's open it up for questions. Anybody have questions with this? That's great, because I wasn't going to be able to answer. Awesome. So we're going to go – another thing that we like to try to do in the state of the company, just because they're weekly and we want to keep them short, we want to talk a couple of numbers. We want to throw some numbers out there. We always want to keep everybody educated on what's going on in the market. We've talked a lot about them, right? So, Joseph, let's have a conversation just for 5-10 minutes around 2 leading indicators of what could be coming. So contracts written and listings taken. You want to share your screen and talk about it?
Yeah. So I'm just going to go straight to the MLS. So I pulled it. This is live right now. This is actually the first week of May. So from May 1st to May 8th, basically, and just running the Friday to Friday. There were 510 homes that went under contract. Of course, that would be a little different now. If you do pending and active contingent, it actually takes it up over to 600. So it's actually even more than we originally were saying, because obviously people are inputting them late. And then if we go over this past week and we do the 8th through today, it's right at 600. So it's 600 homes that went under contract over the last week. So, I mean, that's amazing, right? I mean, that's a strong market. It's, we were down in the 3s at one point.
Twos.
Yeah. So, I mean, and then if you just do active contingent, again, it's still in the high 5s. So the number is not exact, but you're looking at 600 homes going under contract in a week. So that's a lot.
Yeah.
So the question is what do we do with that information? How do we make hay while the sun shines, but then also prepare for what, everything else that we're, where does this go long term? We don't know, but we know right now a lot of homes are going under contract. So that's the good news, right?
And that's the thing is we get a lot of questions, and I've had a lot of conversations with agents, and it's like, okay, so at one point, a few weeks after the quarantine, all that good stuff, and all that hit, right? A few weeks after that, we're down in like 259 contracts or contingents. Then the week after, like 290 something. Like we got decently low, and people got pretty concerned there, naturally, and understandably so. And then we started to see it tick up, and then all of a sudden we have one of the best. I think last week was the most contracts put under contract in a week, or the most contingents in a week in the Charleston market ever. Right. I mean, it's pretty unbelievable. And we're still in COVID. I mean, we're still going through kind of this pandemic and working our way out of whatever it is, whatever that means. Right. So it's pretty unbelievable. Do you see this as kind of a built up, everything kind of stopped and then people kind of stopped their search? Do you see this as a pent up demand kind of thing where those individuals that planned to buy in our spring market kind of stopped, hit the brakes, and now as they start to see kind of what's going on, they knew they had to move in the springtime. Do you see these last 2 weeks being that pent up demand, or what do you feel?
Yeah, I think it's a little bit of both. I think it's some pent up demand, and then I think we're probably borrowing some buyers from the summer. I think some people who maybe were waiting out are seeing that the market's still strong right now. I mean, interest rates record low. I mean, everything right now points to buying a house if you want to buy a house. So I think it's a little bit of both. I think we've definitely got some pent up demand, some people, holding off, so to speak, and I do think some people are just moving a little sooner than they thought they were going to.
Yeah, that makes sense. Now, what about when we throw in the fact that when we throw in listings taken, right?
Yeah.
And we know that right now we're still in a low inventory environment, right? It's still a seller's market.
Right.
How does that play into everything for you?
I mean, it's gonna continue to be a pretty solid seller's market. So Stephanie's mentioned this a couple times. It's we've got buyers out there that just want the deal, the COVID deal. Well, the sellers don't need to give a COVID deal right now. I mean, we're looking at, if you do rolling 3 months. In April we took, over those 3 months was 6,200 listings. So in a month, we're taking 1,800 listings. That's not, I mean, it got low at the end of the year like it always does, right?
Yeah.
But I mean, look where it's comparing, April this year versus your April last year. I mean, that's going to create, yeah, I mean, look how much it's come down from April of last year. So that's going to create a strong seller's market. So your sellers are holding the cards right now. Oh, by the way, if you don't, what this also indicates is if you've got a listing that's sitting, it's overpriced. There's no reason it shouldn't be selling right now. There's no other, I mean, there's just no, you'd say that at any time. It's especially the case now, because if you look at months supply, I mean, we've 3 months supply at the end of April. That's crazy low.
And you just brought up a really, really interesting point. You talked about when we look at our numbers, and we've talked about this in the past, when we look at our numbers, we look at the multi-year trends. And the reason that we do that is we want to understand what are our agents doing? What are our agents feeling in the market? What are they doing?
Right.
And when we looked the other day, and we were all in our own offices, the three of us, me, Tiffany, and Joseph, we were on this webinar, and I ran a couple of numbers real quick in understanding, okay, so we have a lot of listings taken, and we've taken a decent amount of listings taken, rather. We're up dramatically year over year. Mm-hmm. However, our solds aren't up as dramatically. And when you do some math, you realize that only about 55%, I know it's lagging, and I know that we've brought in a lot of listings over the last couple of months of agents that we've brought on board. However, it's only 55 to 60% of our listings have sold, right? Over the last few months. And then that begs the question, why, right? What's going on? And when you look at that number, the overpricing does seem to be an opportunity in our market center. Would you say that's the case?
Yeah, I mean, it does, because what's interesting is if you take those stats that we just did, and then I'll pull this, I'll put this back up here. The days on the market is not following the trend that you would think it would. It's still kind of been creeping up. I mean, we had a little bit of a dip here, from March to April. But I mean, if you look, I mean, we're still kind of high from where we were April last year. We were at 57. So we're not, you would think the days on market would be going down because you have the number of listings coming on going down, right? And you have the number of closed sales starting to tick back up. So, I mean, it's definitely an interesting market right now, you know, and then going back to pending, it's like 5,100. Well, this is again, our pending's 1,600 over the month. It's not too shabby.
And that's the other goofy part to me. It's like all these factors, right? And we say it a lot. We get, as real estate agents, we get paid for knowledge, advice, and service, right? And this is part of the knowledge and advice. And when we look at this, the goofy aspect is you've also got an economic landscape that we've never really seen before at play, right? In 2008, the worst week, I think it was, of unemployment, of those going out and getting unemployment or filing for unemployment, was 605,000. In a couple weeks back, the worst in this whole pandemic was 6.6 million. We
Right.
10 times the number in a week. Now we have a lot of other factors into that too, right?
Mm-hmm.
The economy shut down for 2 months and pretty much nationally. You also
Yep.
have the fact that we've got trillions of dollars from a stimulus package getting sent out to consumers, right? But then the question is, what do they do with that money, and is that enough? Is that going to help, right? So the
Right.
question then persists. If we have 35 million people plus filing for unemployment, and we have this unbelievably strong real estate market at the same time, does that catch up? What does that look like in 6 months to 9 months to 12 months? And again, back to what Maggie always says, we don't have a crystal ball. We have the numbers
Right.
as they are, and we have to advise our clients based on the market of the moment, and we have to start to think about that. Does that make
Yeah.
sense?
Yeah, it does. I mean, we talked about, on the regional call at 11, Mark Brenneman, our regional director, was talking about this whole stimulus, and he's part of an investment group, and one of the local bankers in Hilton Head was saying that they're predicting that the total stimulus is probably going to get close to $10 trillion that the government's going to be pumping back into the economy, which on one hand, you're like, okay, so they're pumping it back into the economy. But if you put that in perspective, the 2020 projected basically economy GDP of the United States was 25 million, right? Or excuse me, 25 trillion, right? So this $10 trillion stimulus won't cover 6 months,
Nope.
right? I mean, so it's like, and then now we're printing money, right? And then giving it away, and then we're buying our own debt. The federal government's buying our own debt. So it's like, I think those are like, when we look at the unemployment, we were talking about this yesterday with somebody at Red Day, I can't remember who, but or Chad and I were talking about this. The majority of the unemployment people, unfortunately, probably weren't going to be the target buyers anyway, right? You've got a ton of people in that number are food and bev. You've got a ton of people that are in hospitality. I'm not saying they can't buy, just saying from the demographic standpoint of buyers, that's typically not who the buyers are. So I don't think we really are going to see too much of that from the unemployment standpoint, but what does it do to the rest of the economy? How does that consumer confidence, that sort of thing, like what does that look like from a recovery standpoint? Because that's, 35 million people unemployed. That's a 10-year recovery that they're talking about. So
and I would agree to a point, right? And I love this conversation. I would agree to a point, and here's why: because there are individuals getting furloughed as well, and
right.
some of that unemployment doesn't take that into account, right? There are people that are getting furloughed with a day. Heck, my wife has one day of not unpaid vacation. Well, but she's off today, right? And I don't know where she is, but she's doing something. But she has one day where it's mandatory that she has one day off, unpaid, and that's an impact economically to families, right? And now she still has a job, thank goodness. That's an amazing thing. Yet this is, I think, that decreased I guess paycheck for families also impacts consumer spending and their ability or personal reasons to buy, sell, or invest in real estate as well. Does that make sense or
Yeah.
no?
Yeah. No, I agree.
Because I think it's a big, because you're right. A lot of those individuals are unfortunately in the hospitality industry or in areas that might not be the buyer pool that we're looking for, or impact our buyer pool as much. Yet I think there's
Right.
also those that do, and all these companies that have frozen hiring things. I mean, Boeing and some of these companies down here, the manufacturers, they're not hiring now, and that was a lot of the population growth in our area, which did impact housing prices and sustain housing prices in our area. So you don't, and again, I don't know the answers. I'm just throwing facts out there and
Right.
things that we're having conversations about. I think it's a fascinating conversation. I think we should continue to have it, because collaborating and talking to all of our fellow agents about what they're seeing and what we're seeing in the market and how that's impacting different things is going to have an impact on our business. So,
yep. Well, and Eileen made a good point in the collaborative this week in our breakout group. At the end of the day, all we know is the current numbers we have.
Yep.
And we know over the last 7 days in Charleston, 600 homes went under contract. So we relay that information to our clients and say, listen, if you are looking to buy or sell, especially if you're looking to sell, it's absolutely the time to do it. absolutely the time to do it. I don't know what 7 weeks ago we were at a record low. I don't know what next week's going to look like.
Yeah.
So here's what I can tell you about this week. It looks good. So, I mean, you just use that information.
Yeah, it's and that what you just said was one of the most interesting things. 7 weeks ago, we were at a record low. Now we're at a record high.
Right.
It is dynamic. It is fluid, as we say. So
yes.
Continue to look at these numbers on a daily basis. That's what I would encourage everybody to do. Continue to look at these numbers. Continue to monitor what the market is doing. Remember, these are lagging indicators too. These have already happened. So 30, 60, 90 days ago, all of this was created, especially these closing numbers, things of that nature. Now the contracts, those are forward looking at leading indicators. So continue to pay attention to those and listing taken. Just take that all into consideration. If you have questions, come find me, Tiffany, Joseph, your ALC. Everybody understands this stuff at a relatively high level. So
if not, we'll just make it up.
What?
And if not, we'll just make it up.
Yeah, and we're really good at that part.
Yeah.
What about 600 went over under contract this week? Do we have any idea, or is there any reports to see these home buyers that are coming in? Are they migrating from the north because people leaving New York, Jersey, and stuff like that, or is it resales down here? Is there any way to find out?
Good question.
It'd be a hard one to find out. We could. Yeah. I don't think of how we could.
I don't think there's any mass exodus from New York right now. I really just think it's, out of that 600 number, at least 20% of that was new homes.
Yep.
Right.
And to me, new homes, I pretty much put them off to the side. We're looking at the 500 resale homes, and that's more important to me. I think it was 604, you said, Joseph, and 111 of those are new homes. Now, new homes to me, just so you understand where I'm standing here, they manipulate their own numbers to keep their sales up. They don't report all their numbers, nor do they report them accurately during this time. So I would say discount the regular numbers. And if we look at last year, well, let's look at February before we went into this whole COVID thing. We were pacing the market at 9% above 2019. Some of the numbers back in 2019, just the first quarter, we were ahead by almost 1,000 home closings, and then we dropped down. As of April, if you take April as a single subset of numbers, April's numbers of closings were down 17% from last year. May bounce back, like Joseph's saying, the contracts are back, but we're still having that overlap of closings that had slowed. Right now, from the first 15 days, I did the 14 days this morning, the first 14 days of May, last year we had 693 homes closed in that time period. This year we had 516. Okay, so that's 26% down. So we're still feeling that COVID effect. And like Joseph said, 3 weeks ago, 4 weeks ago, we were at the bottom. Now we're at the top. I think I'm going to stick with my resale numbers as far as going forward. I just don't trust the new home sales, my opinion.
A very good
Yeah,
point.
I think it's a good point. Yeah.
And it also begs the question, like, what do builders, that's product, right? And it's inventory, right? And inventory costs money on a balance sheet. And what do they do? How does that impact? Because my understanding is in shifting markets, new home sales get hit pretty hard, right? And they have the ability to offer incentives, things of that nature. And how does that play into all of this moving?
And that's what they've done. They've offered D.R. Horton offered $30,000 on a $300,000 house to the agent. I mean, that to me just says that house is overpriced. You have I ran into a situation last week valuing another D.R. Horton, an Emerald house up in Seven Lakes, whatever they call the place, Bridges, and they had houses out there for $490,000, $495,000, and $500,000, which they took off the market. But if you dive into the actual tax, what they sold it for in the tax records on CRS, you're going to see that they only sold it for $430,000. So those numbers that are sitting out there, as far as under contract, I don't believe at all. especially on a new home deal. So that's just my opinion.
Yeah. And so that's the other part of this, right? Pay attention where you're getting your data too. Like, and take all of these factors. I know that we're giving a lot of numbers here, but you have to take all of these factors into consideration in making your opinions, right? So it's really cool information. Thanks, Greg.
Well, listen, and this goes back to your overpriced, Vince.
Yep.
Okay, and I know that's where you were going with this. We have a lot of listings on the market, and they are overpriced.
Yeah.
You cannot price them right now per the MLS. You really got to dig deep.
Yep.
100%. Use tools that use the tools that you have access to. Use APC. You dive into those that are more experienced, right? Dive into the ALC. Ask them questions. Really, really cool stuff. So I appreciate that perspective, Greg, and I appreciate everybody jumping on here.
I didn't mean to hijack you.
No, it's good.
That's the point of these.
Good. Yeah, that's the point of this. It's
cool.
Awesome.
So what does this say? Where are you getting these numbers? Sarah, they are coming from the MLS.
CRS. My numbers come from CRS, yeah. MLS,
Perfect. Love it. Well, if anybody has anything else, you have something?
Yeah, I was just going to end with birthdays.
Those are great.
We're not going to sing because they're not on here.
Thank goodness.
Really, really exciting. Tomorrow is Brad's birthday, and Brian Modansky's birthday's on Tuesday. So if you see him around in between, then make sure you give them a shout out on birthday.
Awesome.
Love it.
Exciting.
Thank you.
Oh boy. Hey, have
Happy
a great day, folks.
Both of them.
All right, y'all have a great weekend.
Give us a call. Have a great weekend. Appreciate everybody, and I will talk to you later.
Bye, everyone.
Thank you. Bye.